CPI inflation data comes out in 5 days. And imagine as we start this video that on this S&P 500 chart, we get soon some type of bottoming out that we saw in 2018 into a continuation, a reversal for the bulls. If this happens in traditional markets, what do you think Bitcoin might be doing? What do you think altcoins might be doing? So as we head into this week, I'm going to talk about why inflation data that is coming out is so crucial to this storyline playing out. So hit the subscribe and like on the way in. We are really diving into the data lately, and we're getting even deeper here because in terms of the monetary cycle and what's happening, it means so much. It's not just a matter of looking at Bitcoin charts and altcoin charts. There's a lot at play right now, and I want to dig into it. So to lay the groundwork, I just posted about Truflation. Please notice inflation data over here on Truflation website, 1.3%. You can see it's continuing to fall. This has been, and over the years, I've been talking about Truflation on this YouTube channel. This has been such a good leading indicator for actual inflation. So I just posted Truflation inflation is falling. It's a big deal because CPI data comes out April 10th, 5 days away. Truflation is the most reliable leading indicator. So here's the deal. What happens if these numbers are correct and this really is acting as a leading indicator and the numbers on Thursday actually come out lower than expected? The end of this post, I do mention, there's not a guarantee that CPI data tracks so quickly, right? It might be even more delayed. CPI data might not come in lower than expected, but what happens if it does? It's a very meaningful thing when we start looking at the short-term markets, and here's a short-term chart on Bitcoin. But I think even more importantly for most of us here, the bigger picture is what is so important, because I really think we are at a very close pivot point in terms of a reversal for markets. And all of this data coming together suggests this. And I want to explain exactly why. So regarding Truflation, it's such a powerful tool because it's tapping into more than 13 million data points. The Bureau of Labor Statistics, 94,000 data points. That's why the data is different. That's why it's a leading indicator, because it's pulling in way more data and it has a better view of what's going on. So here's the deal. S&P 500. This is why it's so similar to where we are right now. I've talked nonstop about, the tariff fears that led to this massive drop in 2018. And then we talked about it's exactly what's happening right now. The tariff fears leading to a massive drop right now. But it's not only that similarity. We have a very similar thing happening from a monetary perspective. And this is kind of part of the plan, right? Just markets falling. We want to see inflation come down, and we want to see interest rates come down. Force Powell to do something. His target is 2%. Inflation, then to start easing. We start getting the expansion on this balance sheet, the Fed balance sheet. We want to start seeing this stop contracting, start expanding, start going up. And check this out. This was 2019. You see this expansion phase. This is what I think we are on the verge of, this expansion phase, which is incredibly bullish for Bitcoin and altcoin charts. So let me explain on the S&P 500 the similarities just so that we really can see what's going on here. So tariff fears, markets fall, right? Back here in 2018, the Fed didn't immediately end quantitative tightening, but they gave kind of a reassurance that it's getting close, right? And look how the market reacted to that alone. So that's kind of that first step. Then mid-2019, inflation's at 1.7%, which is Powell's target rate, below 2%. And then you can see right here in September, officially, quantitative tightening ended, right? So once it ended, you see Fed started buying treasury bills. And so if we go and we look at September, October 2019, we go and look at this balance sheet right around then, right? Look at this uptick. The expansion phase began. And what was S&P 500 doing? Two things. It started going up right there. But notice how months and months and months, even before all of this happened, it started going up. Because markets saw what was happening and what was getting ready to happen. This is where we are right now. So does the story sound familiar? Inflation, 1.7% back then. And we see Truflation, 1.3% potential leading indicator. We are getting close, in my opinion. Not only that, put aside all of this data, right? Like if I remove all the drawings in the mess, look at this candle approaching this 200-week moving average on the S&P 500. This is an area of support historically, going back years and years. So put aside this confluence of data that puts us in a very similar area. The bottom is looking close on this chart. That does not mean the bottom is in. There could be another week, 2 weeks. Who knows what the bottom formation would look like? I'm just saying, do you see this playing out once again right now? And if we go now and we start looking at charts, here's where we are on the Bitcoin chart. So what I did was, and this is a very good visualization exercise. It's not to predict exactly the time frame of it all. It's not to even predict like targets, right? We have targets. We have our targets to the upside in terms of the inverse head and shoulders on Bitcoin. But this fractal is very simply the fractal from when all of this began in 2018, the bottom of that move, that capitulation move. Fed gave signs that it's going to start pivoting. And then, that was the low, right? We obviously had COVID that kind of came into play. This chart could look way different if that didn't happen, meaning, maybe support at the 20-month moving average, continue to the bull market, right? But either way, you get the point. Bottom was in and it was time to go up. The question is, again, don't know the time frame. Bottom, are we here? Is it going a little bit lower, maybe to the 20-month moving average, into the 60s? We've been talking about the potential for continued downside and consolidation for Bitcoin. Is it going to go to the 20-month moving average in the 60s? And then we're pivoting. You can kind of ignore this. Hopefully we don't have another black swan event happening. But you get the point here. We could be at the beginning of the next bull leg up. And that is so meaningful in the Bitcoin chart for obvious reasons, right? Bitcoin strategic reserve, the demand for Bitcoin right now is off the charts. We're in a brand new era. We are in a brand new era, hyper Bitcoinization era. But what does this mean for altcoins? So same fractal, what could be in store for altcoins? And again, the fractal isn't being used as targets, okay? But it's being used as a visualization to say, especially for the altcoin charts, the bull market has not started yet. When we go into expansion phase and the Fed goes into expansion phase, and you can see, on the S&P 500 chart, remember, like October 2019 even started buying treasury bills. When this really kickstarts, altcoin markets might finally enter their bull market. And the timing this cycle has lagged, right, from previous cycles. I think 4-year cycles have lined up very nicely with the monetary cycles. And that's why we had it wasn't predictable, but it was a very consistent bull market every 4 years. And it hasn't happened this time. And everybody is not everybody, but a lot of people are just like, it's just game over. It's game over for crypto. And I am on the exact opposite of that spectrum. I think it's just delayed, number one. But not only that, crypto has never looked so bullish as we sit here on the zoomed out. So there's sentiment is so bad. There are a ton of bears all over the place, but I remain so bullish. And this data that we're looking at, all the confluence of these similarities and what the monetary cycle is doing, this is making it even more bullish. And I think, obviously, let's prepare for continued volatility on the short term. You go to a Bitcoin chart, this week might get crazy, especially going into the CPI data and everybody anticipating, who knows what the headlines will say. The big institutions are pushing kind of bearish headlines. And when that happens, pay attention, especially when it's happening in bottom formation areas, because that is often done to manipulate retail so big money can buy. So again, we might fall in terms of Bitcoin consolidation. Remember this fractal back here, just swing low, back up, swing low. We're in a very similar thing. We know our targets to the upside. If Bitcoin starts breaking these moving averages up to $87,000, that is a very bullish sign, a first bullish confirmation area for the macro. But we have to get there first, and then we can talk about it. And then when it comes to altcoins, everybody, it's the same story. If you go to the weekly chart, this is everything excluding Bitcoin. Altcoins still holding support at a higher low Fibonacci. We have that 200-week moving average down here, $860 billion. If markets are volatile, if crypto finally does catch up to the S&P 500 capitulation, crypto start falling, let's watch to see what that area does. But on the macro, what is happening right now, monetary cycle wise, right now in this moment, is very similar to what happened here. So just keep that in mind. I don't know if you were here back, in the markets back here in 2018, but I do know right now you're watching this video and you're here now, and we're getting a very similar setup of ingredients for these markets. So I wanted to share this data as we go into this week. It's a big week because inflation is pushing a lot of narratives as well. So let's see what happens. This influences Jerome Powell and him finally pivoting. He's taking a very long time, as usual, it seems. But let's see what happens this week. I hope you're having a good weekend so far. Subscribe, turn notifications on. I appreciate you cruising through. I'll see you in the next video. God bless.